Hello and welcome to Ticker Tapes. Today, we're back in the world of ETFs. As of the end of July, total assets under management in the ETF industry had reached $6.55 trillion, according to data from the ETF database, and these were almost 2,500 U.S.-listed ETFs. Those funds are mostly listed on one of three exchanges. The NYSE Arca exchange plays host to just over 1,600. NASDAQ counts some 406 funds among its listings, and the CBOE is currently home to 483 ETFs. The overall number of listed ETFs could rise quite significantly if single-name funds prove to be popular with investors. These are funds that track the performance of one underlying stock, but they often do so with a twist, perhaps offering inverse exposure, leverage, or even both in the same wrapper. For example, TSL is the Granite Shares 1.25 times long Tesla daily ETF. The fund is 1.25 times geared to movements in the Tesla stock price. It's important to note the word daily in the fund's title, however, as this tells us that the ETF resets on a daily basis and is therefore only really suitable for short-term trading and not buy and hold strategies. A leveraged ETF, TQQQ, the ProShares Ultra Pro QQQ, which provides traders with 3 times leveraged exposure to the NASDAQ 100 index, had the fourth biggest inflows last week, according to data from FactSet Research and ETF.com. TQQQ took in $541 million, or just under 5% of its assets under management, which represents quite a significant bet on the NASDAQ. Although given that the index has fallen by more than 4% in the last week, we could be forgiven for thinking that this was a short covering play, except that there is an ETF for that, because ProShares also offers SQQQ, the ProShares Ultra Pro Short QQQ, which provides traders with a 3-time leveraged short side exposure to the NASDAQ 100. Put simply, the price of SQQQ rises when NASDAQ falls, and that price change is magnified or leveraged 3 times, such that the price of SQQQ has risen by 12.8% over the last week. Another ProShares fund was also in this week's top 10 inflows table, and that was the SH, the ProShares Short S&P 500, which offers traders a one-day bet to the downside in the S&P 500 index. SH saw $414 million of new money flow into the fund over the last week, which suggests to us that a trader or traders have taken big directional bets on the performance of the S&P 500 index, and that they were happy to have held on to their positions over the long Labor Day weekend. They weren't alone in feeling bearish about the prospects for the large cap equity benchmark either, as $3.77 billion left SPY, the S&P 500 tracker, with another $611 million coming out of SPYG, the S&P 500 Growth ETF. These redemptions represent almost 30% of the total inflows into SPYG over the year to date and around 4% of the fund's total assets under management.